Big technology's capital spending, better known as CapEx, expected to come in at around $320 billion this year, about a 40% jump from last year's numbers. However, investor sentiment around that spending might not be following the same upward trajectory, shall they say. Christina Partsinevelos, crunching the number. You literally took the numbers and you crunched them.
Yes, with an abacus. AI stocks, though, have seen a significant pullback in early 2025 after last year's surge. And you just talked about it, Brian. We know tech giants aren't holding back. Alphabet, as an example, alone is boosting its spending to $75 billion this year. That's 29% more than Wall Street expected. So massive investments, chips, servers, Ethernets, networking, you name it. But here's the twist, the number crunching you referred to. Wall Street's reaction has changed dramatically. So take a look at this chart. Last April, AI-focused companies, the obvious, NVIDIA, Dell, Broadcom, saw their stocks jump when big tech announcements, or CapEx, was delivered. Fast forward to now, those same names, and I've included a few more like Arista Networks, Modine, Marvell, they're barely moving. We're seeing an average of just 1% last week, a fraction of last year's excitement after we saw all of those big CapEx numbers. So what's behind this market shift? Well, analysts kind of point to three key factors. First, you have concerns about tariffs. So investors are looking for safer havens, like software, for example. And you can just see that just in the shift of the IGV, which is a software ETF. It's up about, 9% just in the last month versus the SOX ETF, a good barometer for chips, and that's not up as much. You might be around 2%. Second, you got the DeepSeek headlines that have some questioning the pace of AI development. And then perhaps most importantly, Bank of America is warning that all of this AI spend could start eating into profits, those margins, even for the mighty Magnificent Seven. The big question now is whether this is just a temporary cool down or a sign that Wall Street is really starting to take a more realistic view of AI's near-term impact on corporate bottom lines, aka monetization, Brian.
That is the question. Christina Partsinevelos, we will see you soon.